I do believe will all be in the favor of silver. And that's why those that are looking to own it simply to profit are making a mistake. And you know, this is a gradual process that when it snaps, they'll be like, oh my God, that was the greatest profit ever. But in the meantime, to people, you'd be smart to sell a good portion of your gold. Don't sell it all. You don't have to go all in, but sell a good portion of your gold, trade it into silver, ride that silver ratio back to just reaching its average of the last 100 years of 42-1. You're still 6 times higher than it's coming out of the ground at. And when you see these distortions and you see the amount of accumulation by the big money around the world, at some point that ratio, that mining ratio, has to come into focus. It has to.
As anticipated, inflation figures dictated the trajectory of the gold market this week. The notable event was a significant drop in prices on Tuesday morning, triggered by unexpectedly high CPI data for January. Spot gold, which was per ounce minutes before the announcement, plummeted. Subsequently, prices mainly fluctuated within a narrow $12 range on either side of the $2,000 mark until a minor downturn occurred following Friday morning's PPI release. However, there was a swift but modest recovery followed by a gradual ascent leading into the President's Day-long weekend. Now we'll show you more clips of Andy Schectman and his insights on the precious metals markets. But first, subscribe and turn on notifications. Let's get into the video.
Things that I just wanted to mention. I don't know if we've talked about this or not, but recently we talked a little bit about how the pricing on the Shanghai Gold Exchange versus what we see on COMEX and the LBMA is about $2.90 higher per ounce for silver in Shanghai than in the West. This is arbitrage. They're slowly turning up the heat. I know that the closing price on the 27th of December, the last day of trading day of the year, was 24.31 on the CME and 26.50 on the Shanghai Gold Exchange. It's gone even higher. If the Shanghai Gold Exchange is pricing metal much higher than the West, that's a problem, right? They also just said that they want to start warehousing LBMA metal in Chinese warehouses. Now, how can they do that? Tell you how they can do that. How many people, even someone like you, who's, I hope you know this, and maybe you do, maybe you don't, because they're very quiet about it. How many people know that the Chinese bought the LBMA a few years ago and own the LBMA? So the fact that they are now going to warehouse metal traded on the LBMA, they're going to issue contracts on the LBMA off of the Shanghai Exchange where the metal is 10, 12, 15% higher than it is in the West. I think we can see why 400 million ounces have been taken off of COMEX and the LBMA inventories in the last 3 years. We can see why India is importing as much as they are. They are using the suppression of the Western market and getting to a point right now as they slowly turn up the heat where maybe they've bled dry as much as they possibly can. And now they have to start to turn up the heat a little bit, whether it be by arbitrage or starting to warehouse the LBMA metals in Hong Kong. These are things that I do believe will all be in the favor of silver. And that's why those that are looking to own it simply to profit are making a mistake. And this is a gradual process that when it snaps, they'll be like, oh my God, that was the greatest profit ever. But in the meantime, they're going to lose their mind. If you own it as wealth and understand exactly what is happening and that there is that potential for it to really take off, it makes it a whole lot easier. But if you buy it simply to get wealthy, you better have proper time frame, and you better understand that, you probably have a decent chance of doing well in it, but it will be counterintuitive. It won't be easy. And for a lot of people, they don't have what it takes to hang on and they capitulate. And that's, to me, as I was saying earlier, when you see structural deficits the way we have been for years, when you see such silver bullish friendly news and it goes the other way, you get people that get frustrated and capitulate. And these are the people that bought it for a reason, for this moonshot reason. And when they're the ones finally letting go, it tells me from a contrarian viewpoint that we're getting closer to that moment, as does the actions of what's happening on the Shanghai Metals Exchange and the LBMA and the importing by India. And all of these things tell me we're getting that much closer. But when it happens, is anyone's guess. Mathematically and logically, it will happen. Don't know when, don't know how, but Yeah, I think we're on our way to much higher prices and maybe substantially so. What triggers it? How fast does it go? When does it happen? Those are all the what ifs, but I think there's a greater chance of the what ifs happening than the what if not.
Now, in the continuation of the episode, Andy Schectman highlights the good properties of holding gold and silver as a portfolio diversifier and safe money holding. He does a deep dive into the proper ratio of gold, silver, and how to profit from a trade that doesn't require money to change hands, so you're not compromising your safety to fiat dollars. Hit the like button, smash the subscribe button, and turn on notifications to keep us motivated to do more episodes like this one. Let's get into the video.
Trade to make only one. I'd buy gold. And I know that's not what you or your listeners want to hear, but it's because it's the only other tier one asset on the planet and the biggest money in the world knows it. However, with that being said, I believe that silver is the most undervalued asset on the planet and probably the best investment I've ever seen in my career. And if I had two trades to make, I would load up on silver with the intention of trading a good portion of it into gold when that ratio corrects. Playing that ratio game is something that I've done before successfully. In 2010, it was 85 to 1. It was the second time in human history it ever been that high. I told people, sell your gold right now and buy silver. And within 7 months, you had 37 to 1, just below its 200-year average of roughly 42 to 1. That was over a double with no risk in 7 months and no money outlaid. When you get stretched to these levels, you're talking, this has happened less than a fraction of a percent in all of human history. And we are in anomaly territory. And when I look at what's made me successful, amongst other things, at least in terms of trades over the years, it's been by identifying and exploiting price and economic anomalies. This is one of them. So I would say to people, you'd be smart to sell a good portion of your gold. Don't sell it all. You don't have to go all in, but sell a good portion of your gold, trade it into silver, ride that silver ratio back to just reaching its average of the last 100 years of 42 to 1. You're still 6 times higher than it's coming out of the ground at. And when you see these distortions and you see the amount of accumulation by the big money around the world, at some point that ratio, that mining ratio, has to come into focus. It has to, because the geologic numbers have to come into play. I don't think gold is undervalued. It's the dollar that's gold is overvalued. It's the dollar that's overvalued. And I would simply say to you that you pull the Western suppression out of the price of gold and silver, it will go higher than anyone thinks possible. And I think ultimately that's what happens, is that you see the Shanghai exchange or some exchange like that in Dubai or Moscow or wherever it may be, or in coordination, these exchanges reprice gold and silver. Not only would it reliquefy their countries the way Roosevelt did in 33 and get their balance sheet in order, but they're the ones who produce it all, accumulate it all, and they obviously see the importance of it. So to revalue it, I think you could see that ratio massively swing in the other direction. Guys like Bix Weir say it's going to go, single digit, and maybe even silver move ahead of gold in terms of that ratio. Now, that, as crazy as that sounds, look, it's coming out of the ground at 7 to 1, and it's disappearing in nature. It was 16 to 1 for a very long time. So if you can own an asset that's priced at 90 to 1, but is being produced at 7 to 1, I mean, that's 12 times, 13 times nearly undervalued. And so, it's one of these deals where I think you look at the asymmetrical proposition, you have very little downside in that and massive upside. So I think it's as good of an investment from every metric as I can find. And I would tell people, yes, trade your silver to gold, but when that ratio snaps back, give serious thought of trading some of your silver, not all of it, back into gold, increasing what you could otherwise have bought today or increasing what you started with. So the mistake a lot of people make is doing all or nothing. It doesn't have to be all or nothing, but you should own some silver always. And you should also own some gold. I would not count it out as the asset that the BIS, the most sophisticated bank in the world, tells us is tier one. Next to US dollars and treasuries, that's the only other one. So it's significant, and I wouldn't count it out, but I wouldn't go all or nothing either.
Yeah.
What do you think of today's episode? Do you agree with Andy Schectman? Do you feel secure with your savings in dollars? Post in the comment section down below your insights on the video, especially if you'd feel safer having crypto than money in your bank account. Thanks for watching it to the end. Take advantage of the massive sign-up bonuses to get crypto. If you have not yet done so, subscribe to the channel and check this upcoming video because you'll love it. I see you on the other side.